So now that this peace deal has been confirmed, the next peace deal that Trump needs to complete is to end the Ukraine war. That would be massively bullish news because that's been going on for too long and it needs to end. And within the past 24 hours, Bitcoin has been very volatile. Ever since this sell-off in this liquidity flush from 122K all the way down to $109,000, Bitcoin attempted to make a recovery. It got up to about 116, pulled all the way back to support, and is now bouncing off of it. So the last line of defense for support for Bitcoin here is around $107,000. So if Bitcoin does not hold that support, then it could get very nasty to the downside. And on the weekly chart, one thing that I'm looking at as one of the main signals for the end of the bull run is the 50 EMA. So on TradingView, you can go to indicators, just type in EMA, and it'll pop up as the moving average exponential. You just click it. In the upper left, you'll click the settings right here. And then underneath inputs, you'll adjust the length to 50. And for the style, you can put whatever color you want, adjust the thickness so it's easy on the eyes, and then just make sure you are on the weekly chart. Now, when you're on the weekly chart, you can see this entire bull run, Bitcoin's price has respected the 50 EMA ever since, September of 2023, when Bitcoin broke out from 25,000 upwards of 72. It came back down to backtest it as support. Same thing right here for the 7th of April and the end of February as well. So if Bitcoin were to sell off below $107,000, then that would be the next main support. And if that doesn't hold, then in my opinion, the bull run would be over. That would be the curtain call for me. So if we see a further flush out to the downside for Bitcoin, if this were to happen, I would want to see it respect this moving average right here and reverse to the upside to make a new all-time high. Otherwise, if we close below it on the weekly and we don't reclaim it and we do something like this, then not financial advice, but I would run for the hills because altcoins would get absolutely destroyed. And I think we would go into a bear market after that. Now, why do I say that? Well, history tends to rhyme because what happened back here in the January of 2022 until the 21st of March, Bitcoin broke below the 50 EMA for 70 days. So for over 2 months, it was below it. And that was the sign to get out of the market because it struggled to reclaim it right here, rallying back above it on the 28th of March. It did close above it briefly, but that was the complacency stage rally. In every single bear market, we see a complacency stage rally where people believe that we're going to go higher and we just need to cool off, like the psychology of a market cycle, and we're going to break into new all-time highs. But that's the sign that you need to be exiting the market, because just like 2017, we saw a break in a close below it. We attempted to recover above it, and this was just a failed recovery rally in a downtrend forming lower highs for Bitcoin. And so if you didn't exit out of the market here in 2018 or here by April of 2018 or here by July of 2018, after Bitcoin on the weekly was closing multiple weeks in a row below the 50 EMA, then you would have gotten absolutely destroyed to the bear market bottom. And it was the exact same thing back here in 2014 during the bear market. We saw the initial sell-off down to the 50 EMA. We saw it bounce above it, and then we saw it close below it for several weeks on end and attempt to recover above it, and it couldn't. And so right here on this rejection, that was a sign that the bull market was completely over when Bitcoin didn't reclaim $445, and then we went all the way to the bear market bottom. So it's going to look a little bit different this time around. Obviously, this cycle is not a usual one, as every single cycle is different, but there's some other key indicators that you guys can use to create confluence for when the top could potentially be in. And so I'll leave a link in the description below. This shows the bull market peak indicators out of the top 30, when it's the best time to sell at or near the top. And literally right now, 0 of them are saying that it's time to sell. All of them are saying to hold 100%. So that's why I believe, based on data here, that we are not yet at the top and that these liquidity flushes are stress tests on the industry to shake out lettuce hands and the leverage traders to completely reset the market before they send it higher. And what Trump is posting are negotiation tactics and also arguably manipulation tactics for the markets to get better deals. So you can hate it, you can love it, or you can learn from it, right? You have to be agnostic and indifferent, and emotionally, you don't care. You're not feeling positive, you're not feeling negative, you're just looking at the data here. So let's talk about the data. Because when you go through the link in the description below, you're gonna see the data here on all these top indicators are not flashing that we're at the top. Some of them are close, like the golden ratio multiplier is 85% of the way there. Bitcoin trend indicator is 87% of the way there. The crypto bull run index is 86% of the way there. So don't get me wrong, because none of them are flashing doesn't mean that you're early. You're definitely late to this bull run. If you're late to this channel, we're talking about crypto ever since 2020, and then I've been talking about crypto this entire way up So we're nearing the end of the cycle. I think the next move to the upside, if we break into a new all-time high, is the last move, and it's your last chance. So yes, it is not clickbait if we're putting out last chance titles here, because this next move up, I do believe, is your last chance. Because when we finally break that 50 EMA and for several weeks on end, after the next move up, if we break into a new all-time high or if we form a lower high, I believe we are very close to the end, because we can see this macro bearish divergence playing out on the relative strength index on the weekly chart. If I clear the chart here, I've talked about this in so many videos, where when the price chart makes higher highs, but yet the key indicator, which is the relative strength index, makes lower highs on a larger time frame, which is the monthly or the weekly. We're on the weekly right now. It shows that momentum is slowing down from the current trend, which is a bull trend, and eventually we're going to see a reversal. And what signals this is when we see a slowing down of higher highs, and these higher highs get less and less and less, and then we start to see lower highs on the other end, where then the relative strength index starts to make lower highs below 70, and it struggles to reclaim 70. So we're there right now. So a lot of people could argue that the top actually came in on the 6th of October and that we're starting the bear market right now. It's very well possible. Or there's another move to the upside for Bitcoin to get anywhere from 130, 140, maybe up to $190,000 if this goes parabolic. But the closer and closer that we get to December, the more bearish I become. And the more bullish that everyone becomes, the more bearish I become, because I think completely different than the average person, as do you if you've been in the crypto market for a while, because you know that over 90 to 95 to 99% of people lose money in these markets. Why is that? Well, it's because they follow the herd. For example, if we look at the ETH to the US dollar price chart and compare that to ETH to Bitcoin on the left-hand side of the screen, people don't understand the rotation game that takes place, because it's not a retail-driven bull run right now. It's been an institutional-driven bull run. For example, listen to what Larry Fink just said right here.
Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, so from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
But I grow and learn.
So what that means is Fortune 50 companies, Fortune 500 companies have been dumping money into crypto, buying it up, and it hasn't been, average everyday retail like it was in 2017 or 2021. And another example of this would be what the head of markets is confirming over at JP Morgan here.
From a JP Morgan side, I don't think that's in the near-term horizon for us. I think Jamie was pretty clear at Investor Day that we're going to be involved in the trading of that, but custody isn't on the table at the moment. There's a lot of questions around our own risk appetite of how far we want to go down that path from trading and other sides of it, and then custody, I guess, would follow. But naturally, we need custodians, so we're exploring what the right custodians for us for the business footprint that will grow.
So regardless of the custody issue, banks will custody it over time, but they're trading it. And so they're trading on leverage. Plus, not only banks, massive institutions, portfolio capital companies, hedge funds, but listen to what the CEO of Binance just said about countries in Bitcoin.
We have countries, sovereigns, starting to do allocations. We have just announced Kazakhstan working with Binance Kazakhstan, starting their own strategic reserve on that front. So we have different countries approaching us by virtue of the depth of our marketplace, right? So if you believe in best execution, best bid-ask spread, Binance is the place to be, because we have the deepest liquidity. So you have countries approaching us. So we see that huge uptake. And institutionalization has started to happen, and happens at a quite rapid pace, right?
So this is why we need to follow the money. Retail is not doing this. For example, if we go to Google Trends and we just type in crypto and click explore in the United States, or you can sort based on worldwide, let's do that, and let's look based in the past 12 months. Right now, retail interest for crypto is actually in a downtrend right here. So we're at 44 out of 100. Even over the past 5 years, you guys can see that crypto is just at 39, like we're barely making a recovery off of these lows. So we're really in like a bear market for retail interest, whereas countries, institutions, major banks have been backing up the truck for crypto. So with more whales in the market, that means there's more whale games and insiders. So this inside trader right here that opened up the short position literally just like right before this liquidity flush out right here on every single altcoin. He opened up a short on Bitcoin. He opened up a short on Ethereum. And then I think he opened up a short maybe on a couple other coins. He opened up another short right before this sell-off that just took place within the past 24 hours. And so now he's closing his short position. Does he know something?